I'm Corbett Wall with DV Auction, here with your feeder flash for Monday, January the 24th, brought to you in part by Joplin Regional Stockyards. Another big run at Joplin, and man, have they been having big runs all fall and through the winter here, but expecting about 10,000 head here for the regular feeder cattle auction on Monday. Some of that due to the road conditions and just bitter cold there a week ago Monday, and so they're having a few more cattle this time. But that's a big run, and even for Joplin, that's a big run. Don't forget, on Wednesday we got a special cow and bull auction at Joplin Regional Stockyards on Wednesday, be in the afternoon starting at 4:30. After your regular cow and bull weigh-up sale there, but they've got several consignments of replacement stock to sell there at the special cow and bull sale at Joplin on Wednesday afternoon, January the 26th. Cattle on feed, where else? Where else would they be? It seems like everybody's shocked that our placement figures were big on Friday's cattle on feed report. We talked about this. I told you guys that there's no place for cattle to be in the southern plains, especially, other than on feed somewhere. There's no wheat pasture left. All the cattle have been taken off of wheat pasture. It's too dry. We just don't have any forage in the southern plains for cattle to be out on. Maybe some old cows out there and having to haul cake and hay to them. But there's just no place for feeder cattle to be running outside. You go further up in the northern plains, there's some places up there, and they farm some different crops to keep those cattle going, and they may be on stocks or something, but there's just not very many places for cattle to be other than on feed somewhere. Well, naturally, when the cattle on feed report that says how many cattle were placed on feed in December, it's going to be larger than a year ago. And there was kind of a knee-jerk reaction. Of course, people were, throwing up in their mouths and vomiting whenever that come out. It's very bearish. The cattle and feed report, very bearish, that come out on Friday. But I hope, and I assume there will be an initial knee-jerk reaction as soon as the board opens up. I bet it's down pretty good. And then as people ingest that report and start asking around, talking about it, I think it should come back. Now we'll see if that happens. Maybe they've already ingested it and then it'll kind of come back some. But it was very bearish. Cattle on feed report that come out on Friday, 2 o'clock Central, said your on feed inventories as of January the 1st were indeed 100.5%. Compared to the average of the analyst guessed, which was 99.7. That wasn't horrible bad, but it's your placement figure. The placements in December come out to be 106.4 compared to the average of the analyst guessed, which was is always kind of a wide range on the placements, but compared to 106.4, their average was 101.8. Ouch. Yeah, very, very bearish there. Marketings were also a little bit bearish during December, come out to be 100.2, and they had guessed them to be 100.9. So all three main categories there were to the bearish side, with placements being extremely bearish. But look at this report. Go through there and look at some of the things. I know whenever we start peeling back on herds, it seems like it always gets worse, and in this case I'm going to say favorable to the market, but it's going to get worse before it gets better. We are a lot, I think that we've got cows on feed that these cow plants have been buying. They're keeping this cow kill up big, and it has been up big for a long time. Well, and I'm talking beef cows, not necessarily dairy, but some dairy too, but a lot of beef cows being slaughtered. That's offsetting the lighter slaughter that we've had on steers and heifers here of late. But we have been feeding a lot of heifers and harvesting a lot of heifers. Look at this cattle on feed report that come out Friday, and just compared to last year, cattle on feed that went on feed there, your heifers are up 110,000 head. I'm talking about beef heifers because we're just, you know, it's been dry, especially in the northern plains. It's really, really dry in the southern plains. No place for anybody to keep back their replacement quality heifers that they want to get ready to expand with, and they're not. They're just pulling back. And so heifers on feed are up 110,000 compared to a year ago. Steers are actually down 40,000 head. So, you know, that should make you kind of stand back and look at this thing and say, whoa. And then it should be very, very favorable to our far out front futures if you look at that. Because, I mean, whenever we run out of these things, we are going to run out. And it is going to be very, very bullish. And I think we could get back up to seeing some of those prices, not at or above, but, you know, that will make you remember 2014, because we're just going to be really out of cattle. But, you know, can your consumers afford to keep buying this high price beef? How much longer can the Magoo administration keep printing money and throwing it at people? You know, the inflation is getting terrible. We know, we've already said the only way we can stop doing that is to raise interest rates. That's going to kill our economy, and that's going to really make it tough on people. And so, you know, that's something's going to have to give here within the next 6 months or so, because we can't keep going on the path that we're going now. And it's going to be hard on working people, and maybe they won't be able to afford what a lot of them kind of consider to be a luxury item, which is beef, and not just hamburger meat, but your better cuts of steak and things like that. But look at your placement weights. Placements of cattle weighing under 700 pounds in December, the one we're still talking about, were up 85,000 head, and placements of cattle weighing over 900 pounds were actually lighter. So you have to take all that into consideration. Look around a little bit, you know, get out of those offices in Chicago and drive out in rural America like the rest of us do, and kind of see what's going on out there. And I realize this is a bearish cattle on feed report, but I don't think it'll stay bearish very long as far as what happens to the board. But let's talk about what happened on the board end of last week there, and all through last week. February live cattle futures, your spot contract there for live cattle. Monday, of course, was MLK Day, so they were closed on Monday last week. But Tuesday was down 30 cents, Wednesday was up 87, Thursday down 22, and Friday down 40 cents, with February live cattle ending the week last week at 137.92. Basically did nothing all week. It was a nickel lower, a nickel 100 lower, so not much at all. April ended the week at 142.10. The change there was even less, 2 cents per hundredweight, so nothing. Basically steady on your nearby contracts of live cattle compared to the end of the previous week. Your feeder cattle, January, of course, Monday was a holiday. Tuesday down $1.25, Wednesday down a nickel, Thursday down 22 cents, and Friday down 90. And all these markets that I'm telling you about, they were not touched by the cattle and feed report. It didn't come out till after the board closed on Friday. So we're going to get a big down market to start the day on Monday. How far down it goes and how long it stays there, I don't know. Like I said earlier, I think it'll go down with a knee jerk, and then I think as people start absorbing it, I think the report itself, it'll start coming back a little bit. But January feeder cattle ended the week at 160.27. Now they lost quite a bit of ground, down $2.43. March ended the week at 163.30. That was down 307 for the week, and one of the main reasons that your feeder cattle were down is because the grains were all higher. Your March corn contracts last week gained 20 cents, ending the week at 616.25. Beans were 44.5 cents higher, ending the week on March at 14.14.25. Kansas City hard red winter wheat, which is just spastic, ended the week up 48.25 cents a bushel at 793.25. Your fat cattle trade last week, direct basis in your 5 area feeding region through Thursday, totaled up to be 52,700 head. That's about half what we need for a robust market in your 5-area feeding region. Now I realize some people don't believe that, but we absolutely have to have negotiated trade to establish a market. All these alternative marketing agreements that everybody keeps praising, they have to have a base price somewhere. And then whether they want to admit it or not, they're using the cash market. That's all there is. Talk about price discovery, that's all there is a negotiated market. I understand that you need value-based marketing for people that are selling cattle, some cattle that they think they're really going to hit the grid and all that kind of things. You got to start somewhere on them. Where are you going to start on the price? But live sales through Thursday of last week ranged on steers and heifers in the 5-area feeding region from 135.5 to 140. That was actually higher because the Southern Plains was a buck higher in the bulk of their sales, from 136 to 137. So that weighted average is going to be higher, and it was almost 137.5 through Thursday, and that'd be steady to a buck higher. And we'll get the rest of the sales rounded up and give you what the true weighted average was for last week on our next visit. But dress sales 217 to mostly all 218. That was basically steady. Friday we had a little bit of trade. Iowa, about 800 head of confirmed sales there. Only 15,400 head for the week. That's about 5,000 light of what we usually get. Live sales in Iowa from 137 to 140. We didn't see that 140 the previous week there when the bulk of the trade was going on. Dress sales 218 on Friday. Nebraska, 1,100 head confirmed on Friday. 23,700 head for the week. That's about 5,000 to 10,000 less than what they would typically move in a week's time. Very, very few live sales all week last week in Nebraska. Why? Because, the few that they were selling in Iowa were getting a little bit higher, and the Southern Plains had gained a buck. So they just, they made it tough to give any live sales in Nebraska. Never really established a good live price for the market in Nebraska. But dress sales were all steady at 218, so they just bought them all at 218. And that's your market there. Kansas and Texas didn't have any confirmed sales on Friday. Extremely light movement through the week last week. Less than 12,000 in Kansas. That'd be, sure 8,000 light. And only 3,800 head of finished cattle sold direct basis in your whole Texas, western Oklahoma, eastern New Mexico areas there of your Texas feedlot areas. Only 3,800 head. And, you look, Joplin Regional Stockyards going to have 10,000 today on Monday. Oklahoma City will have 11,000 or more, and we can't sell 3,800 head in all the feedlots in the Texas Panhandle because they don't want to negotiate, and we can't get any of these big organizations to get behind this compromise bill that we've been working on for 2 years here. And now, American Farm Bureau Federation, which totally disgusted me whenever they had their voting delegation there, and they couldn't even debate on the subject in an intelligent manner because not enough of them know anything about it. But they said that they want to change that compromise bill. Hence the word compromise. We've already compromised that bill. It's already been endorsed by the White House. We've got the votes to do it. What do we need the Farm Bureau Federation for? Their strength is in the Southeast. And the hell of it is, the guys in the Southeast that are running your bigger programs in the Southeastern United States through Farm Bureau, they understand it. It's the damn Southern Plains that are coming in. They wouldn't normally show up to anything for Farm Bureau. And, they're completely brainwashed by TCFA, KLA, and your NCBA guys that are totally, sold out to your big packers and your corporate feeders. They're coming in there trying to change them around and saying that they want to change that compromise bill and not include any mandates on there. That's what the whole thing's about, people. We've already passed that other bill for the library on the formula deals. That's what the bill is a mandate for minimum negotiated cash. I'm showing you how small it is. 3,800 in all of your feedlots in the Texas Panhandle. There's feedlots there that that sell feed hundreds of thousands of cattle. We can't sell 3,800. It's unbelievable. And it's the only way you establish a price for fat cattle. Then you can go do all your AMAs and your formulas and this and that and everything you guys want to do. But you've got to sell some cattle on an open negotiated market to discover what the price is so that you can establish that. All we're doing is trying to set pretty low minimum requirements of trade where your guys that are selling in the cash market can sit back and negotiate. They don't just have to take what's dictated to them early in the week. I just don't understand why people can't understand that and why we have to have it, or we're going to completely lose this industry like the hogs have and the chickens. Look at your box beef cutout values to end the week last week, and this is a weighted average on all of your choice cuts. 290.87 was your weighted average on all of last week's choice cuts, and that weighted average price was $10.60 higher than the previous week. Your late sales on Friday afternoon were a couple dollars almost higher than that. So we're still on the, your packers are doing gangbusters. They're selling the product that they sell higher every day and giving less for fats. But our weighted average is going to be higher on fats because the Southern Plains did get $1 more. But you look at your select weighted average on all of last week's sales, 280.08. That was up $9.51 from the weighted average of previous week. And your late week sales on Friday were actually over $2 higher than that weighted average. So doing a pretty good job. Your choice select spreads about $10.80. Didn't have quite as much movement on the spot trade there. Just 548 loads of cuts, grinds, and trimmings. That's less than what we'd had the few weeks there right after the holidays. Your slaughter, which is what everybody's been so worried about, not bad. 636,000. Sure, we'd love to have a harvest of 650 or something like that, but you compare that 636 the previous week, it was up 18,000. They had a pretty healthy Saturday, 61,000, but when you compare it to the same week a year ago, that 636 was 26,000 less than the 662 we had the same week a year ago, which shows you it's the time of year where your packers are wanting to turn those chain speeds up. Now let's see if they'll do it. Now I realize people have been sick, you can't get everybody there, but you have to make arrangements for that kind of thing. And this Omicron deal is kind of washing over. People are going to be coming back to work, or you need to make them come back to work and get busy harvesting those cattle. Year-to-date cattle slaughter is down almost 8% so far for the year, but we hadn't even got through 1 month yet. Let's talk about your feeder cattle market. Now, as I told you guys, the board is likely going to be down pretty swiftly here to start Monday, and your big high volume feeder cattle auctions are going to be lower. And I think the board's going to be down more early in the session, and it should come back after guys go on to National Ag Statistics Service and take a look at that report and kind of see that it's all on those lightweight cattle because there's just no place for them to be. But you look at your real-time index on DV auction, ended the week last week at 159.60 based on an 800-pound steer up through the middle 12 states. That was only down 12 cents compared to the end of the previous week. And it's just been jostling either side of 160 based on the 800-pound steer on your real-time index. Your cash feeder cattle in your sales last week, big calves, feeding calves, even stockers and yearlings of the few that there are, pretty much all sold unevenly steady to $3 higher. But it turned lower late. Your Friday sales that run late, they were lower, of course. What few sales they had on Saturday, they were lower. You look at a market that's on Saturday, Fort Scott livestock there in Fort Scott, Kansas. Look at these loads of steers that I pulled out of Cattle Market Central there. Some of them pretty impressive there, including that top one there, load of 734-pound steers at 168.75. That's pretty good. But look at all of your loads of steers there that are over 800 pounds. Now they're sure lower. You know, they're just selling in the 150s and in the lower 150s for the most part there. So that's what it's going to do to your market. That's kind of what it'll be like here on Monday. I was out in Fallon, Nevada at Nevada Livestock Marketing's special, their early month special or late month special. They're going to have another one just here in 2 weeks here in February. But you look at the Saturday morning session, had over 6,000 head of cattle, and we didn't get started till noon on Friday as we wait for the buyers to get there from California. But sold till pretty late Friday, and then come back Saturday. Had several buyers stay with us. Still had a good market there on Saturday, including this quote here. We sold 90 head, 562 pound steers. That's in your upper fives, pretty good guys. At 182 in Fallon, Nevada at Nevada Livestock Marketing, and we had a pretty snappy sale there, and we got DV auction bidding going there. And a lot of guys from the central part of the country are bidding on cattle out there in the desert because they're so hardy, and they've had weather on them, and they're pretty well foolproof, and they bring them back. Sold over $1.5 million worth of cattle online on DV auction there at Nevada Livestock Marketing on Friday and Saturday morning. Look at Lexington, Nebraska, Lexington Livestock Market there. 3,400 head for their sale on Friday. Steers were steady to $5 higher. Heifers were steady to $3 lower. You look at this automated market report, and you see all the cattle there that sold at Lexington, Nebraska on Friday. Most of these sales, I would say the bulk of them happened after your cattle and feed report come out, and it was still pretty decent. Of course, they've got a premium quality and a premium market type sale there, but look at your best tested weights. 677 head of 6-weight steers, average 662 at 175.12 on your weighted average price. 682 head of your 7-weight steer calves, average 770 with a weighted average price of 164.67. And 202, not that many, but I wanted to give you the quote of 800-pound steers, weigh average weight of 823 pounds in Lexington, Nebraska, with a weighted average price on those 8-weight steers of 166.86. Wow. Best quote that I saw late last week, your National Beef Wire top quote for the day come out of Crawford, Nebraska, Crawford Livestock Market there. 65 head, 520-pound steers bring $214.50. And that's your feeder flash for Monday.